as you know, I go by name of Dumelo Trades. So today in this video, I'm going to be pretty much explaining my new strategy that I've been working with last year until now recent. Uh, in this strategy, there's a lot of things I'm going to explain, and it's been long since I've dropped the video, so things pretty much change. Things have changed, a lot have changed. So so uh, we're gonna be explaining the strategy and how to apply it and which time frame to trade the thing, then to look for trades, and then we're gonna be showing our back tested momentum. I back tested it, and it's pretty much a swing. It's all about swing trading. It's not day trading. It's not scalping. It's about swing trading. So if you're interested in swing trading, or you're if you are interested in being a swing trader, you should hop on this video where I want to show you my strategy. And if you have an interest into it, you can learn from this video. If you looking for some tips or some way into becoming a profitable uh, trader, a profitable trader, uh, you should hop on this video, so that you can get some lessons, or so that you can get some points you'll be missing while you trading. So let's get to it. Let's not waste time. I'm gonna show you how it's done, the strategy, how it works. And again, we're gonna be working with our fundamentals. We're gonna be looking for news breakouts, or everything, the forecast news that been coming out, and then from there forward, they're gonna be videos that I'm dropping, trading live, and then maybe I might go live on here on YouTube. So if you wanna hop on, you should subscribe to the channel, so that you can get notified when I get live. So let's get to it without further ado. Let's not waste time. So basically, the strategy I'm going to be talking about is called dealing range. I'll be the past videos that I posted here on YouTube. I'll be talking about it. I'll be showing. I posted videos trading it live, but now I'm no longer trading it daily. I'm trading it for like days. It's like swing trading, so it's easy and simple when you trade it like that, because there's a lot of things I realized about myself when I was not when I was like off the social media, or when I didn't post videos trading this strategy. But now I'm back. So now we're gonna be only swing trading. So it's gonna take me a long to post videos, but I'm gonna make sure that I deliver post videos when I'm live trading. I'm gonna go live on here in YouTube. I'm gonna go live here in YouTube. Maybe Twitch. We might try Twitch, but not now. We're gonna get live here on YouTube. So pretty much I've said a lot about uh, dealing range in my past videos, where we're gonna look for old lows and old highs. Then we're gonna wait for price to go into a premium or discount level, and then we're gonna trade from there. So pretty much, first thing we need to apply, as is we're looking for bias or direction, why you wanna trade, or which trades are you looking for when trading. So, firstly, if we have a scenario, we have a bullish market, strong bullish market in the higher time frame, like daily time frame, weekly time frame. If our price is bullish, then we're gonna look for bullish trades only throughout the year, because this strategy, I'm not trading daily. I'm gonna be swing trading. So it means I'm gonna be looking for trades uh, on the 4 hour time frame, which is right here. Yeah, I mean the 4 hour time frame. Um, then the daily time frame and the weekly time frame for direction. I'm looking for direction and the weekly time frame and the daily time frame. So sometimes I'll be looking at the daily, sometimes weekly. So you just choose which one is more suitable or visible enough for you to actually confirm that price is either bullish or bearish. So it's pretty much simple. Looking for a trend, high time frame trend. We're gonna look for a trend. Then from there we're gonna mark the break of structure, which is really important for you because this it can act as a break of structure or a key level when you are in a trade or below it. So sometimes it works as a key level because you know where to take out your trade. It's a level where you can take out your trade if you wanna if there's a if there's any moment where you are in a trade here, somewhere here, but further do you can look for levels this side to use key levels this side to use to trade to use for your take profits. You can use other levels from the side. So from there we're gonna take it forward. As I shown you, we're gonna look for direction first. Then once direction is confirmed, then we're gonna go to because direction I'll be looking at in the daily time frame. Daily time frame. So I'm gonna be looking at this direction at the at the daily time frame, and then for if you wanna if so on in currency pair or any pair or forex pairs or cryptos or indices, anything you wanna trade from, then so if it happens we are bearish, you're gonna be looking for bearish trade, so on so on. Then I'm gonna explain forward how to look for trades and how I look for trades and all that. And then I'm gonna be showing you back tested where I back tested this strategy where which I was like off which was those months didn't drop videos for you. So second thing you need to do is hop on into the 4 hour time frame where you're gonna be looking for trade. So in during the 4 hour time frame, a simple rule is that whenever price is bearish, we don't trade because our direction is bullish. So whenever price is at these points, it's here, we don't trade. We only trade when price goes up, which is the reason why it takes time, and which is the reason why this strategy can take you months without finding any trades. So it means these points we are not trading because we have a bias which is bullish. So we're only looking for bullish trades. That's all. We're looking for bullish trade. It means we're going to be trading this side and this side and this side. That's all. So for you to not lose money, because whenever you have a bias or whenever you follow in your direction, and even when you're looking trades uh, with the same direction you are you are following or you're going with, it's gonna be easier for you to trade, and it's gonna be easier for you. It's gonna give you confidence to trade without fear or emotions, and it's gonna help you a lot to find high profitable trades. So it's easy that way when you trade within the direction that is presented by the market. so that way it's easy for us to trade. So secondly is that we're gonna go to the 4 hour time frame, which is the one I'm in right now. So we're gonna look for trade. So whenever we are in the 4 hour time frame, uh, let's let's assume that we have a low, right? That's the this is the last low of uh, uh, is the pullback or is the pull down of the higher time frame, right? And it happens that in the lower time frame, price during that let me just put it like this: during this time, we have this kind of move happening. We have this kind of move happening, and price come again, hit the high, and then we're gonna wait for price to come. So we're gonna mark the high. Then we let's assume this is what is happening in the let's assume this is what is happening in the lower time frame or the 4 hour time frame. This is what is happening. Let's assume this is the this side of the time frame is this side of this side of the let's assume is this side of the daily time frame. This let's assume that this is the this what is happening here is the same as this in the higher time frame. So what am I looking for here in terms of the strategy that I'm going to be using to find swing trades, or I'm going to be using to find in the 4 hour time frame? So what I'm doing is that I'll be waiting, I'll be doing that is that dealing range, it says you wait for old low to be taken, right? You have to, for this low to be taken, and then we're gonna wait for this high again to be taken too, and then we're gonna pull our DRT levels, or you can call them equilibrium levels. So what's important in this thing is that we are willing to wait for price to get into the because we are bullish. It means we must wait for price to get to the uh, discount level in order to buy price, uh, uh, in order to buy price. So we're gonna be waiting for price to get into the discount level, and then from there we're gonna be looking for trades for entries inside this level only, the discount level. So we're gonna be looking for bullish trades in discount level. We're gonna be looking for bullish trade in the discount level, and we're gonna be looking for bearish trades in the premium level. It's pretty much like this, simple. It's simple like that. So we're gonna be looking for bearish in this level. We're gonna be looking for bullish in this level. It means it's pretty much simple. You know what to do. If you don't want to look for any entry models like imbalance or order block like this, you can just use this level here in the premium, in the discount level, to actually be to actually uh, to actually save yourself, or just be simple and just do simple. Don't mess your analysis, or don't maybe don't don't do things, don't do a lot of things, because we are in a higher time frame. Don't need a lot of things, so only we need this level. We need the old highs, we need old low and old high to be taken in order to look for a pullback, whereby we're going to be looking for entries inside the discount level in order to buy price. It's more pretty much like uh, in order to sell a product, you need that product to get to its premium price in order to sell it, and in order to buy something you need that product or certain thing to be in a discount level more than gold. In order to go and exchange your gold with some cash, you wait for gold to be to get to be to have much value so that you can earn more cash liquid. And in order to maybe buy a gold, maybe in order to sell your gold, you want to wait for your gold to get to the premium price whereby it's overvalued, it's very expensive. And in order to buy to buy a gold, you want to wait for the gold to get to its discount level, which means that gold has decreased in value. So it's pretty much like that. It's simple and easy to trade. So I'm going to only trade this in the higher time frame because it's very simple and and easy to trade. So you don't have to worry about a lot of things like fair value gaps. But if you wanna use them, you wanna use those type of models in this higher time frame or in this 4 hour time frame, you are free to use them. It's more of how you understand and how your structure is and how your strategy works in the higher time frame. So it's pretty much like this. Even in the bullish, you're gonna be looking for the same thing. You're gonna be looking for old highs and old low, and then we're gonna be putting your DRT levels, waiting for price to get into the premium level in order to sell a certain currency or gold or indices, something like that. So it's pretty much simple like that. So now I'm gonna get to uh, moments or time where I was back testing this. I know I've traded this daily. I've shown there's videos that there's videos that I made trading this daily and looking for daily trades. Now I'm swing trading. I'm gonna be looking for you're gonna take your trades. You're gonna be taking days or even a week. It's that simple. And for me, it's peaceful to trade, to be a swing trader, because you don't have to worry about much. Just place your stop loss, your buy stop or your buy limit, and you take profit, and then you relax and just look at the market move, how it moves. But mind you, that your higher time frame or your bias is bullish. You followed your rules. You looked for trades that involves bullish moves, involves your bullish bias. So it's that simple. It's gonna be simple for you to trade and be profitable, because you are only not going to make a lot of money. You are going to wait for trades to get to your take profit. And this strategy requires this strategy requires being patient, being patient, be willing to wait for days or months or weeks to get a trade, a good trade. So it's pretty much simple like that. This strategy is good, and I think it's perfect for if you are a new trader. You want a simple strategy, or you want something that's simple for you, that's not gonna be tiring, or that's gonna requires a lot of your time. So this one, it's a simple one. So if you are interested, you can learn from this video and start trading and start back testing it from forward. So now let's not waste time. uh, I'm gonna show you where I back tested, and I'm gonna explain it uh, step by step, right? As I showed, firstly, what we must do is that we must look for bias direction. So now, right now we are in the British pound x Japanese yen. First thing again, you can use technical analysis and fundamentals and news. You can use those both, and in that way, it's very simple to have a news breakout supported by a technical. It's very simple that way. So I'm gonna show you where you should go and find your news catalyst or news breakouts where you can read news, you can analyze news that coming out every day. It's pretty much called the Forex Factory. It's a simple app. It's very simple. It shows every information you can think about. Here, if you can look right now, we are in the calendar, news calendar zone, whereby you see it shows every news that is happening. It's pretty much simple. It's simple to find. You can search it up on your. You can browse it. It's pretty much explaining everything about high impacted, medium impacted, low non-economic related stories. It can show related stories. It can show news that be coming out can show about Iran, US, Trump even shows when Trump tweeted. So it's pretty much simple to trade. Explains a lot of things. It shows you if the forecast, if the actual is actually green, it means the forecast is better than the forecast. If it's red, it means it's worse. It shows you these things. A lot of people don't understand this month over a month, quarter over a quarter, because they don't know what this thing means. So even I was so confused. But right now, Forex Factory has helped me to find out, and you can even click and get information, a bit information about those news, everything. It's out. It's pretty much simple in this. Uh, uh, Forex Factory on this Forex Factory, so you can even use it. It has brokers, has it can show you the market. A lot of things can it can show you a lot of things. So it's pretty much simple this one. So if you wanna you need if you already use it, it's good. If you need if you need if you need something that can show news and all of that, you can go and use Forex Factory. It's pretty much simple, and it pretty much helped me with my strategy because I could read news simple, and it's pretty much simple, and I could understand what's happening in the market, all market conditions. So now let's get back to the job. So if you look here, you already see I have marked my break-off structures, and this pretty much showed me that British pound x Japanese yen is bullish. So right now I had an idea. Okay, if Japanese yen is bullish, these are trades that have been back tested. I've been back testing this for over half a year right now because I started it in January. It pretty much was nothing there until I saw this happening. I pulled back, uh, have a pull down there, and price started becoming bullish. So in that point, I went to the 4 hour time frame. Uh, I looked for my trades there. So pretty much, if our price is bullish, even in the 4 hour time frame, I'm gonna become bullish. That's something you should keep in mind. If your daily or your bias or it's bullish, it means below here you must be bullish. So as you see, so again, I'm gonna explain this in a simpler way, and I'm gonna show you how I came up. I marked these old highs here. It's not a mistake, or it's just it's the true high of price. It's just the true high of price. So candlestick pretty much have the body, the wick, and the thing. Problem with it, a lot of things is that a lot of traders pretty much take these wicks as highs and all of that. But me, I take weeks as a history where price was at. So I don't actually mark my high here. I mark my high here at the body, at the top of the body. That's where price. And if you wanna make this simple for you, you can use line chart because it can pretty much show you the lows and the high, correct lows and high of price action. So this, it's simple. It's pretty much simple like that. So if you can see here, we have an old low here, we had an old high, and then price, as I explained, as after we having an old low, and we're gonna have our initial old low and initial old high, whereby we're gonna put our our DRT levels there at our initial low and initial high. So initial high means the recent high that we had, or yeah, a recent high and a recent low. So that's where I found my true high and low. So if you can switch into the thing, you can see the wicks do not represent my high, but the body are the one that that represent my high of price, because price was here and was here. Price was here, but it moved to here, which this is the correct low. So from there, I marked my DRT level. As I told you, in order to buy price, you need to wait for price to what? To trade in the discount. And I said again, if you want to use these levels like order block, fair value gap, if you see, I saw a term of imbalance from this here to here. And then from there for imbalance price, so from here, you can even use this as fair value gap from here, imbalance from here and here. So see, I saw a little bit of imbalance. I waited for price to get to the low and I marked my trades. And here was pretty much simple. Because there was a fair value gap or imbalance, I saw an imbalance here, which was more reasonable for me to trade here. But I had two options. It's either I use this first option and this order block here. But from this order block, I was gonna put my entry here at the center of my discount level. So because price really weak here, and it shows this uh, imbalance strong, cause price uh, came weak and pulled up and came and rejected again, which again this level, it shows a little bit of it showed a little bit of support here again, as I saw price rejecting here, resisting here a lot of times, and I saw again price supporting here, was not breaking this level, which led to me opening a trade here. You can see this acted as a ceiling and this acted as a uh, floor, because you can see price couldn't break this level. It came uh, a lot of times, but it still couldn't break this level, which led me to open my entry here than here, because here was a really high profitable entry and I entered from there. It was pretty much simple. And again, we're gonna go to another one which was pretty much simple too, which I switched again to my line chart, where I saw an old low when price was uh, retesting or supporting this level, or rejecting to break this level. I saw price saw an old low, and this became old. This became my initial low. So from there it went from this to this, where I saw the old high, this price breaking this high, which became my old high, where it led to this becoming my initial high. So from there we're gonna be looking for our DRT levels, or equilibrium levels, you can call them that, because equilibrium levels are discount and premium levels, where you're gonna be looking for sells in the premium and buys longs in the discount and shorts in the premium. So from there, it's pretty much simple to this one too. It was pretty much simple this one too. So from there, that's pretty much simple. When price went here, and you can see these lows carry you can see price engineering liquidity. From there you can see chopping candlestick with long wicks, seeing price rejection. You can see a lot of volume, you can see price chopping up, chopped candlesticks here. You can see liquidity price. You can see equal lows below here, and which serves as price is gonna come back and collect these lows in order to fuel price, to the upside, to the upper side. So again, we had a balance price, or a inversion fair value gap, and from there I pretty much put my, it was pretty much simple. So I pretty much put in my order at the center of my discount, mainly because we had equal lows. So from there, just assume price we're gonna break, we're gonna come for these equal lows, and then after breaking the equal lows, it's gonna go up, and that just like that it happened. I put in my trade, my entry at the center of my discount level, and price went up. Simple, pretty much simple, pretty much like this one. It was pretty much simple too. Did the same thing. Put my entry on the center of my discount level, or the 25th level, or the 25th percent level. Then from there price went up. Simple like that. Then we're gonna go to another scenario where I show you where I traded price, where it was bullish. Pretty much the simple, it's pretty much the same apply. I applied the same it's pretty much the same strategy. It's pretty much the same rules I applied on this one. This one was bearish, and so it happened after I saw the bias was bearish. I looked for bearish trade. From there I looked for bearish trades. I didn't look for bullish when price went up to make that pull up. I looked for only bearish, cause bias, I was trading under my bias. So I'm looking for bearish only. Pretty much the same, looking for old lows, old highs. The same, the simplest way, you can use your line chart to mark those ones. Then from there you can put your DRT levels. Then from there you're gonna be cool. It's gonna be good. It's gonna be really fun to trade, because it really it takes time though to place trades. It takes a lot of time. It takes many days. It takes 5 to 15 days. Sometimes some trades took just 5 days or 6 days, and pretty much simple here. Same apply. We're gonna apply the same way. So the line chart, then we're gonna mark our old highs and old lows. From there we're gonna look for our DRT levels. From there we are done. Simple like that. It's pretty much simple like that. If you enjoyed this video, like and subscribe. So I'm gonna end it here. So I hope y'all enjoy your day. Thank you.